Hey, good afternoon, traders. This is Jeff from ZenTrader.ca, and hope everybody is having a nice 3-day weekend. It is beautiful and sunny here in Vancouver, and let's look at some charts. I want to start here. I'm going to spend a little bit of time on this chart, and we'll see how much time I have left to get to the other charts. And what you're looking at is a graphical representation of the percentage of stocks in the S&P that are trading above their 50-day moving average. And I noticed this trend line, this downsloping trend line, which, if you think about it, it really shouldn't even be as precise as it is here. I mean, this is not really a chart that should be as spot on as this has been. And or so maybe I'm not explaining myself, but here's something I want to point out. So back in October, November, the amount of stocks that are trading above their S&P, trading above their 50-day moving day average, was very high. It was at 93, and we were all the way down here on the S&P. Move forward 3 months, 2011. We're higher on the S&P, but the amount of stocks are lower by 5. Move forward a couple months, in March, that number is yet still decreasing, indicating that there is internal weakness that is going on that you may not be able to notice because the stock market is moving higher. So everything looks good, but it's really not. Because you can see here that the S&P is almost near its peak. Let's move forward a couple more months here. In May, this number is yet lower, and yet the market is at a peak. It's actually almost at a double top. And now, if you fast forward to July, you can see here that this indicator is almost about to touch this trend line, and yet the market is now finally starting to show some of that weakness, because the trend was that the market would be higher while this indicator was weakening, but now the market is actually starting to weaken. So this indicator is actually confirming what's going on, or rather the market is confirming what this indicator, what we already knew was happening. So it's going to be interesting to see next week if we hit this downsloping trend line and then reverse off of it. Because right now I'm bullish, my timing signal is bullish, everything looks great, but you always have to look at the opposite side of the trade as well, and to try to see, well, what could derail this current rally. And I'll stay long, and I'll continue to trade from the long side until my timing signals for me to take the opposite trade. And I'm actually in cash right now. I actually used Friday's big move up to unload my index ETFs that I was trading, and the individual momentum stocks that I were in hit all my upside targets, and I allowed the market to take me out. So it's good. It's good because I think the market, let's go here, let's show here the NASDAQ really quick with what time I have. It's had this huge move, and the RSI, this is the 60-minute chart of the NASDAQ, is very, very at high levels, and we could easily in my opinion come back to the 2720, 2740 area, or the RSI 40, and still this uptrend would still be very strong. So I just think that there is a little bit of room, whether or not the market does correct a little bit, maybe consolidate some of these gains, but I just think buying now may be the wrong thing to do. And I think a lot of traders missed out on last week's rally, so it's going to be interesting to see how we open up on Tuesday. So happy 4th, guys.